Hey everyone, welcome back to the channel and welcome to episode 34 in my monthly series, first episode of 2023, where I'll give you a quick commentary of the overall stock market in the past month and review some of my favorite or some of the best income-oriented high yield funds on both the Canadian and the US stock market, and we'll see which ones are a good buy for this month or the ones that I feel are undervalued. If you're new to the channel, welcome. This channel and my investing strategy is all about income-oriented investing, a long-term buy and hold approach, and the primary objective of this strategy is really to generate relatively safe, consistent, passive income forever. And one important factor in my strategy is that you continue investing regularly over time, so you could compound that interest and really capture what's undervalued in the market every single month. So I do not invest in single companies anymore. So all the picks will be funds, so closed-end funds or ETFs that are really designed to provide high income or high passive income. They are essentially income-oriented, not growth-oriented. So most, if not all of them, have income-enhancing strategies like leverage or covered calls or a combination of both. Remember that I am not against the more mainstream growth or dividend oriented style of investing. I think these strategies are great and work very well long term if you are more looking for total returns. My strategy is more for maximum cash flow. So let's take a look at what happened in the market in the last month. I'd like to take a moment to thank the sponsor of this video, Hamilton ETFs, the creator of the very first enhanced all-in-one covered call ETF. Of course, I'm talking about HDIV, which is currently beating the TSX 60 or the overall Canadian market by over 4%. So it's doing very, very well. They also have a US equivalent, HYLD, which is also another enhanced covered call or all-in-one covered call solution. And they have other enhanced ETFs as well, including HCAL, the top performing Canadian banks ETF. So make sure to check out their funds on their website, hamiltonetfs.com. All right, so let's quickly look at the S&P 500, which is a great representation of the overall US stock market. In the last month, I am filming this on January 3rd, by the way, we're down about 5%. So December wasn't really a good month for the US stock market. I'm assuming there's a lot of people selling at a loss just so they could get their losses in for 2022. And if we look at the Canadian stock market, just a tad better at minus 4%. So minus 4%, the TSX Composite Index, and almost minus 5% for the S&P 500. So I still think there are definitely inflation, and now it's more recession fears of 2023. If you haven't seen my Blossom post, I posted that recession is probably already here. I don't know why there's such a big deal anymore. There definitely will be a recession. We're probably still in one, but don't forget what a recession is, everyone. It's just a slowdown in economic growth. It's nothing to be fearful about. And I actually celebrate it because the stock market will be more volatile. It will be more bearish or flat, which is great for us investors or income investors that keep buying regularly over time. So I think 2023 is going to be a great year to pick up some cheap shares all year round. But we'll see what happens. I'm not making any predictions here. So as usual, let's check out now some of my favorite or the top income-oriented funds. Let's start with the Canadian market. And of course, we're going to start with what I refer to as the big five, of course, which is HYLD, HDIV, BMAX, the four all-in-one covered call solutions, and of course, EIT. The OG of the income guys on the Canadian stock market. So HYLD is definitely still an amazing buy, over 14% yield right now, which is absolutely incredible for a non-split fund. And some big news, actually, they recently made some changes, which I think are really, really good. So if you scroll down, you see that they added what I feel is a really good covered call ETF on the American stock market. And now I feel HYLD has the five best ones. So QYLD, RYLD, XYLD, JEPI are the four that were there. And now they added JEPQ, which is the JP Morgan NASDAQ Equity Premium Income ETF, which is JEPI's twin brother. So JEPI's more S&P 500, JEPQ is more NASDAQ 100. So it's a competitor to QYLD, and they have been performing really, really well. I'm talking about JEPI and JEPQ. They've been doing really well, and we'll take a look at them when I cover the American high yield fund. So now HYLD, in my opinion, is even more perfect. What they did is they reduced TXF, which is a technology covered call ETF from CI, and they added JEBQ. So they reduced TXF in half approximately, it seems like, if my memory serves me right, and added 6.8% in JEBQ, which is great. It just reduces the fees even further because the MER on TXF was 71 basis points or 0.71, and JEBQ is only 35 basis points or 0.35. So I never, HYLD just got better, guys, basically, and it's growing. The fund is at over 300 million now. Very, very impressive, and it will celebrate its 1-year anniversary in February. I'm very excited because that's when the performance data will come out. So HYLD, awesome pickup. Distributions have been solid, 14 cents a month, no changes there. HDIV is the second one from Hamilton ETFs. This follows more the Canadian stock market. It's still completely destroying the TSX 60, which is an indicator for the overall Canadian stock market, by over 4%. So it's beating it. It's no surprise. Obviously, this is covered call strategy. It has a bit of leverage, so it's doing extremely well. You could see that here, right? The gray is the TSX 60 and the red is HDIV. Not as far as I could see, no changes. Dividends have been, still at 12.5 cents, consistent for the little while. So HDIV, also a good pickup if you want more Canadian exposure. So that's why, HYLD and HDIV pretty much complement each other really, really nice. HYLD US, HDIV Canada. HDIV, another one that I really like. This is a Harvest's all-in-one covered call solution, which basically has the 6 biggest or 6 most popular Harvest covered call ETFs with a little bit of leverage on top, 25% leverage. So no surprises here. It's rocking a nice yield of over 10.5%. So also a really, really good pickup if you like the Harvest ones, which I like. I own all 4 of these now, by the way, the all-in-ones. Distributions have remained really solid. They haven't announced their first distribution for 2023 yet, but I'm assuming that it's probably going to be the same. And of course, now we have BMAX, which is the 4th all-in-one, which is rocking about 9.5% yield. Like they said at the beginning, it's always going to be between 9 and 10. So this is just a combination of all of Brompton's covered call ETFs, as well as 30% in fixed income. Also waiting for the first distribution of 2023, but I have no doubt it's probably going to be 10 cents again. So those are the 4 all-in-ones, all great pickups. Of course, this is what I call great foundation funds for your Canadian portfolio. Of course, we have EIT as well, which is always good. Always trading at a small discount. It's worth $13.65, but you could buy it at $13.38. Of course, this is probably 1 day or a business day behind here, but still a 10 cent a month, dividend. And EIT is probably going to be the big winner of 2022 in terms of total return. You see that here, the last year. Of course, this is a bit outdated here. It's the end of September. I can't wait till they update it, but it's been doing very, very well because it does not have technology stock. So that's it for the ETFs, everyone. Plus EIT, which is a closed-end fund. So that's it for the foundational ones. Let's keep going. Split funds, let's look at the Brompton ones. All trading at pretty much premiums. None of them really stick out to me as good buys this month. There is LCS, which is a life insurance ones, which I don't really like, but the net asset value is $4.91, so it's getting very close to that $15 unit NAV, and it's trading at $4.43. So maybe this one could be interesting. Usually as soon as they re-enable the dividend, it pops again. See, look, $4.91. What's the unit NAV? I'm just curious now. $15.01, so it's right there. I wouldn't be surprised if this one pops, but either way, it's not for me. Nothing really stands out. They're mostly all trading at premiums, especially GDV, a very, very big premium here. Let's look at Middlefield, who redid their entire website. And by the way, if you want to know where the NAVs are, I believe it's, let's see, investment. Of course, I can't find it right. Oh yeah, funds, NAVs. That's where you go to see the NAVs. So you have RS. At the NAV is 12.76. It's trading at about 14, so it is at a premium, but not really that high. It's a good time to pick up RS, in my opinion. ENS 14.41. It's worth 14.41. It's trading at 15.16, so also a very small premium. So always good to pick up. These are, in my opinion, the most low risk split funds, simply because they're very, very high unit NAVs. Let's look at the quadravest ones now. So DFN always trades at a premium, pretty big premium. Of course, I'm filming this on January 3rd, so it's not updated, but you got the December 15th data. But I'm sure when the video comes out, it's going to be December 30th or the January 1st. So always make sure to look at the NAV. This is the unit NAV, by the way. So you subtract $10 to get the Class A net asset value, which is about 562. Like I said, it could be a bit lower. And DFN is trading at 558, so that's at a big premium. FTN, this was actually really good. I picked some up last month because it was trading at a very small premium of 10% or less, but now it's back to about 773, and yeah, it's 925, so it is at a premium right now. BK, same type of deal, very big premium. It's worth about 1026, and you got to pay 1324. This is of course the highest yielding one here at one of the highest yielding one. SBC is the competitor. So nothing too interesting with the split funds, honestly, this month, guys. I think the big winner is still, getting the all-in-one. So when there's nothing really trading at a discount or at a very, very small premium, I suggest always going with one of the big fives, whatever you need. RS or ENS is always, it's kind of good this month as well, especially if you want real estate. Good time to pick up some real estate. Last but not least, there's the Bitcoin and Ether ETFs. If you're interested in that, guys, if you're into it, take a small position would be my suggestion. If you're not interested, don't even bother with this, but at least you're going to get some yield. Unfortunately, the distributions have gone down. Especially with the Bitcoin, it went down again, the latest distribution. So this is because, like I spoke with Purpose recently, volatility has been really low with this. So the Bitcoin price is pretty much has been flatlining. So you see here, there's not much volatility. So the distributions have gone down. But hey, I still think this is the safest way to invest in Bitcoin and Ether if you are into it. If not, don't bother, don't worry about it. Ether, same thing. Well, actually, it's at 2.1 cents. So unlike the Bitcoin, when it didn't reduce, it stayed the same. So yeah, for me, I personally have not more than 10% in these funds in crypto, but it's completely up to you. So my opinion, a great time to buy it, definitely, because now there's a lot of fear still with Bitcoin and Ether. So if ever you would you're curious to start a position, now would be a good time, but be careful with that moderation. This is a speculative asset. So my opinion, the big winner is still HYLD. You get your biggest bang for your buck because this is following very closely the US stock market, which is very tech heavy, which the NASDAQ is suffering right now, right? And it literally has a lot of technology. It has QYLD, which literally is a covered call NASDAQ 100 ETF. And now they have JEPQ, they have TXF. XYLD is S&P 500, very tech heavy. JEPI, S&P 500, very tech heavy. So very tech heavy, which means it's the biggest opportunity right now. But I mean, it's up to you to find the balance of, which ones you like. Even HDIF is a good pickup because it's about 75% US, 25% Canada. So there you have it for the Canadian overall view of the top income oriented funds. Now let's check out our neighbors to the south and how the American funds are doing. All right, the top high yield funds on the American side. So of course, we're going to start with the big five on the US side: QYLD, RYLD, XYLD, JEPI, and JEPQ, which I feel are the best five covered call ETFs or buy right ETFs on the US stock market. All five of which are now in HYLD, which is absolutely incredible. So QYLD still pumping out those monthly distributions. Of course, it's doing the worst, right? Because it's NASDAQ 100, and the NASDAQ 100 has been getting killed in the last year. And what's a little disappointing, I have to admit, is that the distributions have gone down, which I guess it's normal because the fund value is going down. So the distributions are going down as well. Typically they're about 22, between 18 and 20 cents, I would say. And now, they've been 16 for quite a while. So hopefully this reverses once the NASDAQ goes up. But as far as I'm concerned, QYLD is doing exactly what it's supposed to be doing. So definitely the most undervalued out of the five, right? Because it's pure NASDAQ. So QYLD and JEPQ would be the undervalued ones. If we look at RYLD, the Russell 2000, which is 2,000 small and medium-sized companies in the US, very, very unique because it's not big cap. Also kind of doing the same thing. They are going down, not as much as QYLD. Typically, these ones are between 22 and 24 cents. This has been the lowest one in a while, the latest one here at 18.7. So I guess they're all kind of doing the same thing. XYLD, which is S&P 500, fairly strong. The last one was a bit lower at 38 cents, but they've actually remained pretty healthy. So yeah, not so bad here. But the big winners, I think, recently are really the JEPI and JEPQ. I don't know what it is. They have smaller management fees than these three, which are 0.6. These are 0.35. And the yields have been going up and the distributions have been stellar. I mean, so they work a bit different. Don't forget that, these ones are literally, they'll just write a 100% covered call on the index themselves, and they just rinse and repeat every single month. These ones are a bit different. It's more actively managed, which is why I'm surprised that the fees are so low. But I guess it's because it's JP Morgan, right? They're the biggest bank in the world or whatever. So really consistent and high distributions, higher lately during the volatility. You could actually see that they're really high in the last couple of months, which is excellent, which is really, really, really good. JEPQ as well. Let's see. So yeah, 57 cents, 54, 68. There was a nice monster one here. Now they're going a bit lower, but it's okay. You could see that they're higher than when it first started, right? So they're probably getting better at writing the calls on this. So I have to admit, guys, JEPQ and JEPI, very, very impressive. Definitely, my top choice if you're more of a total return investor. That's really important to you. You want income, but you want total return as well. JEPI is probably, it looks like it's stronger than XYLD, and JEPQ is stronger than QYLD. I have to admit that. The numbers don't lie. But yeah, all five of them are, still indexes. There's still covered calls on them. So I definitely still all like all five of them. I love the fact that all five are in HYLD. I can't tell you how happy I am about that. Now let's look at some other of my favorite high yield income funds and ETFs. So you have SVOL, which is one of my favorite ETFs, very income oriented. I talked to the Simplify ETFs about this one. I couldn't be happier with the performance. You see that the latest dividend, the last dividend of the year, has been a slightly higher, which is normal because ETFs they need to pay out all their capital gains by the end of the year. So they've been actually very, very consistent at 32 cents. I talked to the fund manager about that. They are planning on keeping it, if I understood correctly, at 32 cents, just to make it consistent for us investors. And then I'm assuming at the end of the year, if there's extra, they'll distribute it out. So very, very cool and unique ETF here, which you could easily always get 15% yield. I strongly suggest to check out the recent Q&A I did with them. And now we also have three other great ones from BlackRock that are actually writing covered calls on fixed income, which have been doing tremendously well. I don't know if they're going to keep doing tremendously well over time as far as the yield is concerned. So of course you have the TLTW, which is just a 20-year government bond. They write covered calls on it. Pretty good. The last dividend, 51 cents, 48 cents, 62 cents, very, very high. Then you have LQDW, which is investment grade corporate bonds, so high quality corporate bonds, also doing really well. And you see that the distributions here. Then you have the one I own, and it's my favorite. This is just the high yield corporate bonds, typically referred to as junk bonds. Don't let that term fool you though. This is probably going to be the one with the most volatility. So in my opinion, the highest distributions, and the last distribution, this one was the highest. So really, really cool ETFs here. If you want to add some fixed income to your portfolio, typically I can't stand fixed income, but hey, fixed income with covered calls, that's maybe a game changer. So really nice way to complement. If you're American, I still feel these five are probably good foundational, or it should be the foundation of your income portfolio. But these three now, along with SVOL, really nice complement, especially if you want that fixed income. SVOL, I just really, really like it. Now moving on to the closed-end fund space, which is absolutely huge in America. And you know me, guys, instead of picking and choosing individual closed-end fund, I rather go with the all-in-one solution. So there's pretty much three big options. There's YYY from Amplify ETFs, which is a really cool company. They actually have a very popular ETF called Devo, which is kind of like JEPI and XYLD. They do covered calls on the S&P 500, but a lot less covered calls. So it's more growth oriented. But they also have YYY, which is an all-in-one closed-end fund solution, which it's just an ETF that holds 45 diversified closed-end funds. So you don't have to pick and choose. There's a lot of my favorite ones in there, including number one holding is the PIMCO Dynamic Income Fund, which is PDI. Liberty All-Star is a good one. They have a lot of BlackRock. So yeah, they have some of the best closed-end funds here. And their distributions hasn't changed as far as I could tell. If we just scroll down and check, I think it's still at 12 cents, right? Yeah, 12 cents. So the last one, or the first one no, this is the last one of 2022. So still at 12 cents. So this is would be your basic all-in-one closed-end fund option. Then you have RIV, which is the one I really like, which is a closed-end fund that holds other closed-end funds and SPACs. And this one, get ready for a big reduction of the dividend in 2023. They, just like CLM, they reset their dividend based on the NAV, and it's 12.5% of the NAV. So you're looking at a big reduction in dividend, but it's okay. Just remember that when the dividend is reduced for a whole year, it means that there's more growth prospect, right? Because they're giving out less of the fund out in income, so it has more of a chance to grow. Same thing for CLM, which of course I forgot, which is a shame. So let me just open CLM here real quick. So CLM, of course, is actually a very good time to pick it up, guys, because it's only trading at a 13.73% premium, which is very rare. Usually the premium is way over 20%. So I feel like this is a really good time to pick up some CLM if ever you understand how it works, right? This is very controversial, of course, and I'm actually planning a CLM video with a contact I made in America who's very pro CLM, and he seems to be an expert in CLM. So expect a video on CLM coming up shortly, and we will talk about dripping at NAV, which I've learned about recently. So stay tuned for a CLM video, guys. Very, very interesting. And just want to cover the last all-in-one closed-end fund solution. It's CEFD, which is an ETN, and it's leveraged at 50%. So you have YYY for your basic option. You have RIV for your medium option, which there's a bit of leverage in here, but only maximum up to 33% overall. And then you have CEFD, which is just an index of over 100 closed-end funds. If you click on index, you could check them out here. A lot of BlackRock ones, by the way, with 50% leverage, and you have monthly distribution. So nothing really to report for those three except for RIV. They are reducing their dividend starting in 2023, and that's pretty much it. Of course, there's a huge closed-end fund market in the US, guys. I can't cover all of them, but if you want to know what's trading at, a really good entry point, it's anything to do with technology, to be honest with you. So of course you have the big index options would be QYLD or the JEPQ, but if you want something even more specific, I suggest checking out BlackRock's closed-end funds, because there's a couple of their technology ones here. BSTZ and BIGS, they're trading at massive discounts, 19%, almost 20% discount for BSTZ with almost a 15% yield. I don't know if it's going to be reduced or not. But there's also BIGS, which did reduce their dividend already, but it's still at 12.34 after a 30% reduction. It went from 10 cents to 7 cents a month, and this is at almost a 23% discount. So if you're feeling lucky, if you want something very, technology heavy, which is what's suffering right now, I would suggest one of these two. And by the way, they also have a healthcare one, which is also trading at a big discount. So I don't know what's going on with these big discounts, but hey, BlackRock, I trust BlackRock. and really, really nice yields if you're looking to pick and choose some closed-end funds. So that's it for the American stock market. Again, it's really the technology stuff, so the NASDAQs, so JEBQ and HYLD, that's pretty much the biggest bang for your buck in my opinion. Hey, don't go yet. I have some important reminders, including some more recent ones, and I'll try to keep it as brief as possible. And for everything that I'm about to discuss, the links and info are in the video description below. So first of all, if you didn't know yet, I do offer a one-on-one coaching session where you'll have a 1-hour Zoom call with me where you could ask me all the questions you want, and I'll help you and assist you best I can. Just remember that I am not a licensed or registered financial advisor or planner. So to book a session, go on my website, PASSIVEINCOMEINVESTING.ca, and right there on the homepage on the left hand side, there is a small video. Watch that video to know how to book a one-on-one properly with yours truly. Also on my website, you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once. And this is really a reference tool or a companion tool to help you build your own portfolio according to your needs and your objectives. It has lists of funds. It has sample portfolios for both Canadian investors and American investors. So make sure to check it out on my website. I actually created a video which shows the product from A to Z because I don't want you to spend money unless you know exactly what you're getting. So make sure to check that video out on my website. And don't take my word for how good it is. Check out the reviews. There's over 300 of them and they are all 100% real reviews. So here's some more updated news or recent news. I am now on Blossom, a new investing app designed for investors. I've been using it for a few weeks now. I think it's really, really great. It has a really cool feature where users could actually add and share their portfolios and what they're buying and selling every day. So you could actually link your investing account so it's updated automatically on a daily basis. I recently added my own main portfolio so you could follow how my portfolio is doing live and what I buy every month. Really, really cool. It's like a mix of Facebook and Twitter, but specifically for investing. So get on your phone, click on the link in the video description below and download the app. It's 100% free, so you too could share your portfolio. Just remember to look for me and follow me. My username is Adrian, PII altogether. Also, I do have a referral link for Questrade, so you could get $50 worth of free stock purchases. This is the Canadian discount broker that I use and I recommend. Unlike Wealthsimple, the other popular discount broker in Canada, you could drip everything you want. It has all the stocks and it also has dual currency accounts. Very, very convenient if you're buying both Canadian stocks and American stocks. I have a Questrade video, by the way, which gives you a little tour of the features, so make sure to check that out. I also have a referral link for PASSIV. This is the portfolio tracking tool that I use to consolidate all our accounts to get a nice bird's eye view, so you can consolidate all the information together for easy tracking and stats as well. Also, our Facebook group, Passive Income Investing, is now an invite-only private group. So to join it, you need to click on the link in the video description below and give the group a like to get invited. So we take pride in making this one of the best investing Facebook groups out there with over 13,000 members. There's no scams, there's no spammers, and negative and doomsday people, we kick them out right away. Also, follow us on Instagram if you want a little bit more of our personal journey here in Panama. And lastly, just remember everyone, I am not a licensed or registered financial advisor. This channel is all about my personal investing journey and how I invest to generate high passive income from a diversified portfolio of high yield funds. It's for educational purposes only, so don't forget to do your own research and due diligence. And of course, stay safe everyone, stay healthy, and of course, stay passive. See you next time.